Hello and welcome to the second of our videos within the CIMA paper E3 Enterprise Strategy syllabus. Please remember that the Express videos are linked to the Express notes, which can be downloaded from www.theexpgroup.com. We are in chapter 1 still, and the second of the videos will be about the issue of stakeholder management. We're still discussing the issue of the external environmental factors relating to the development of strategy or to the strategic choice. Now, stakeholders, as you remember from your earlier studies, is a term which is broader than the shareholders only. Stakeholders are everyone who might be interested in the business you're thinking about. The range of shareholders will be very broad, and also their impact, and also whether you need to consider them in your strategy or not. And the first and the most important stakeholder are obviously the shareholders themselves. You owe them as a manager of a company, as a director of a company, you owe them a duty of care, stewardship, many other things. You need to report to them, and they want you to generate profit for them. You also have lenders, which are important for the business because they provide finance. Your investment plans, your plans for the business in general may rely on the lenders. You've got the directors as well. Directors yourselves are also stakeholders in the company. Directors have their own agenda. They want power, they want money, and they are supposed to do everything to increase shareholders' wealth. Then employees, obviously critical for the existence and operations of most of the companies nowadays. In today's world, where the majority of value is added through knowledge and information rather than manual operations, the importance of employees grow. Many companies say, although in many of them it's only a declaration, but still people are their most valuable assets. They're not on the balance sheet obviously, but they are their assets, and in many cases they need to be taken into account when making certain decisions, including the strategic ones. Customers obviously are interested in the well-being of the business. They want a continued supply. They will want to make sure that you do your business well, so you will take care of them. You will take them into account in developing your strategy. They are an important stakeholder. Suppliers. Now you are the customer, and do you care about your suppliers? Well, you do. First of all, because you want to have a continued supply source, and therefore you must be in good terms with them. Government, obviously, they want to tax you, and they want to know that the entrepreneurship does work in the country, jobs are created, new businesses are coming, and the existing ones are expanding. They want to have all that. Now, finally, the general public is also a stakeholder. They live in the neighborhood of your factory or of your company. You provide jobs to them, and therefore they are deeply interested in the way the business is going. As I said, all these categories of stakeholders may have different impact on your business, and therefore you have to assign a different degree of care to them. That will depend on many things, including the business you're in. In some businesses, some of those stakeholders will be more important than others. Have in mind that the interest of stakeholders may be conflicting, and within developing your strategy, you need to take that into account. Look at a very traditional but very clear example. Obviously, the interest of shareholders is to make as much profit as possible. Now, what about employees? Employees want to make as much money as possible. There is a natural conflict. The more salaries you give to employees, the less there is left for shareholders. A number of other situations like these can be shown here. Mendelow's matrix is an important tool in the development of the strategy. It is important from the perspective of how we will deal with the shareholders. I said they will have a varying impact on the organization, and they will also need to be taken into account in a variety of ways depending on that impact that they have. And Mendelow came up with a matrix which shows what to do with stakeholders depending on their interest and power. So the interest of stakeholders in the operations of the company grows that way, and their power grows that way. Now, there is no one place which we can put all the stakeholders into this matrix for all the companies. The position of those stakeholders will depend on the business. There are things we can safely put there. Shareholders will be here. Shareholders, they will have high interest and they will have high power. So they will be considered key players in the company. They need to be given a superior service, all the information they need, and all the access to information. Now lenders will have high power for sure. Now what will be their interest? Well, because they gave us their money, they will probably here as well. Right, it was easy with shareholders and lenders. However, now it's going to get more difficult. If you look at employees, now things will get more complex. If you are in a business where employees are easily replaceable, then probably their power is not very high. Are they interested? They usually are. So with low power and medium interest, they would be here. However, if you're in a business where knowledge is your primary source of competitive advantage, then the power of your employees becomes high. They will usually be interested as well, so again their place will be somewhere here. Okay. Now a similar analysis for government, right? Government will have more power in regulated industries and less power in unregulated industries. So again, the place of the government within that matrix will depend on the industry that the entity operates in.